The JSE was slightly weaker, with global peers mixed as investors awaited news for direction. Local focus is on the SA Reserve Bank's Monetary Policy Committee, MPC, which is meeting later this week. Kagiso Matlala, equity sales trader at Standard Bank, joins us now for an overview of the latest business news. Give us an overview, if you will, Kagiso, of just how the local bourse and the rand are faring so far today.
Good afternoon to you and the listeners. We've had a pretty muted start to the morning and to the week, in fact. The all shares been dipping in and out of the red for most of the session with no real catalyst to drive it in any particular direction. That being said, underneath the surface there is always something going on, and the banks have been one sector that we've seen a lot of activity. I don't know if you would have realized, but from last week on, we would have after Standard Bank's results, there was a large rotation out of Standard Bank into the other banks. That kind of rotation kept the banks moving for a while and putting the banks higher. That stopped earlier this week, and we've seen that kind of that rotation turn around again. The other sector that's been interesting is obviously PGMs. For a long time, year to date, these PGM miners in SA have underperformed, and this is mostly on the back of a weak PGM basket fundamentals. But that looks like it's bottoming out a bit. I think we're starting to see a bit of interest in that sector where internationals and locals are starting to dip their fingers into that sector. And then obviously diversified miners, always an interesting one there. I think the coal sector recovery prices in coal are certainly starting to make that sector interesting again, yeah.
Now, the leading business cycle indicator in South Africa went down 0.5% in January this year, the third consecutive month of declines. Help us make sense of this reading and its significance.
You're right. Down 0.5%. A very broad data point that there's a lot going on under the surface, and it was a mixed bag underneath the surface. But I think more importantly, from a macro point of view, what we will, as you mentioned earlier, SARB tomorrow is what we're looking at. That rate announcement, specifically what Lisecha says after the announcement is and guides the market on when we could potentially see cuts in SA is what we're specifically looking at in terms of the rand, in terms of the market, in terms of the banks. That's what will be more important.
Now, SPAR, which has been in the news a lot lately, their 24-week turnover is up nearly 9%. Talk us through those numbers.
Yeah. So you're right. Revenue up just 8.8%, slight slowdown from previous year. But I think overall disappointing in our view. But we needed a lot more tangible guidance from a few specific issues from management around key issues like the sale of the Poland business. When can we see timing or kind of a timeline for that? Also, they mentioned that they're engaging in advisors to review the capital structure. That does reduce the risk of a capital raise in the near term. But on the other hand, they continue to push on with the SAP strategy, which has been very costly. So we got a few worries in there, and I think we still need a bit more tangible ideas from management in that name.
Master Drilling, they've reported a record revenue for the year ended December, despite a global market and economic uncertainty. What drove those profits?
Yeah, so not one I watched too closely, but you're right. Solid performance. Their revenue was up 7.2% to a record high of about $242 million. And obviously that translates into a HEPS and ZAR that's up about 15.1%. Decent. They attributed to a significant capex investments that they've made in South America South America, Central America, and North America that they've made over the last 10 years. So those are starting to kind of pay off, and they're well positioned for continued growth. They also have a big footprint in the coal sector, so the pipeline looking strong there, and I think this will carry them for quite some while.
German real estate investment trust Deutsche Konsumreit planning to withdraw its second listing on the JSE. What's going on? Yet another company opting out of the JSE.
Yeah, I think this one it's interesting in the fact that they listed in 2021 here. Their main listing is in Germany, obviously. But they did engage local investors, and for a long time they have been engaging. But I don't think the appetite was there for such an investment in SA. I think our rates market is well developed. We've got decent yields. We've got a good liquidity in activities and well-known companies that are well followed and across quite a big spectrum, right? And I think this rate to come into SA and try break into that was always going to be tricky, and clearly that didn't work out in the end.
Kagiso Matlala, thank you very much for your time and insights.